I'm in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. AI adrenaline. Alibaba gets a boost after announcing a collaboration with Nvidia and ramping up its AI budget. Demand still strong. Micron gives an upbeat forecast thanks to strong appetite in AI equipment. And a tone shift. President Trump shows optimism about Ukraine's war prospects while saying NATO should shoot down Russian jets that violate NATO countries' airspace. Let's take a look at markets, though, because we did take a breather yesterday. The Mag 7, in fact, down 1.5%. This after the market didn't get any extra sugar high from Jerome Powell. Not that we were really expecting one, but he certainly didn't pave the way for any more rate cuts, any more than he did after the FOMC meeting. Also, though, this idea started percolating that Nvidia and its suppliers and clients, that there was this virtual/vicious cycle going on between these companies paying one another to do business with one another, if you like. Now, that said, Micron may set the tone today, because then Micron came out after the close last night and gave a very upbeat forecast on demand. So we do see futures rising once again. Bear in mind, the S&P 500 is already 3% above the average analyst estimate for the end of the year, and this has only happened 3 times. So we'll see if it holds, but we have been breaching those records, that's for sure. Russell 2000 has been a little bit more volatile, but again, futures pointing to a higher session today. Let's take a look at yields. We're down a couple of basis points across the curve. As you can see, the 2-year yield at 3.56. That 30-year yield is all the way down now to 4.71, and we're at 4.10 on the 10-year. And I also want to point to oil as well, because this tone shift from President Trump may have an impact on oil markets. We're already seeing responses from the likes of Iran. Right now, though, oil down a little bit. Brent is still above $67 a barrel. All right, let's get to some individual stock movers now. Over to London and Valerie Teitel. Valerie.
Good morning, Bonnie. Let's start with Alibaba. The CEO out claiming they will be boosting their AI infrastructure spending to over $50 billion. Shares of Alibaba absolutely flying on the back of this news, up near 9% so far in pre-market trade. But the CEO saying he estimates that AI infrastructure spending is going to reach $4 trillion in the next 5 years, and they do not want to fall behind on the AI race. We also heard separately that they have confirmed they will be using Nvidia software in some of its robotics and a tie-up with the 2 large tech firms, and also separately that Cathie Woods, the famed tech investor, had bought a stake in Alibaba just last Monday. So a lot of positivity around Alibaba. The shares are up around 40% this month alone, and adding to that in pre-market. Next, let's move on to Micron. This one, as you mentioned, out with earnings, gave some strong guidance and also beat when it came to revenue. The stock is up 1.5% in pre-market trade. There was a very high bar going into this earnings release because Micron has rallied 45% in the month of September alone. The high bandwidth memory chips that Micron creates are critical to producing these AI models. So they beat that high bar and then some. Micron in the green. Lastly, let's move on to Lithium Americas. There are reports that the Trump administration is looking to convert a Department of Energy loan into a 10% equity stake in the company, very similar to what they did with Intel with their CHIPS Act funding. We're seeing shares of Lithium America up 66% in pre-market trade. Bonnie?
Valerie, thank you so much. Valerie Teitel there in London. And in just moments, we'll hear from Max Kettner of HSBC on the potential for a continued rally in risk assets. Later this hour, JPMorgan's Sitara Sundar on her call for a shift in portfolio strategy. So Max Kettner of HSBC seeing more room to run for this equity rally as stocks hover near all-time highs. He writes, the broad-based asset price inflation is continuing on full throttle, and we think there's more to come. Max joins me now, Chief Multi-Asset Strategist at HSBC. Max, if you weren't already in the hot spots in this market, what would be the reason to get in now? What will the catalysts be for it to power even higher?
Yeah, good morning, Vonnie. Thanks for having me. Look, I guess in terms of the data, actually, what we are seeing, in particular in the last 2.5 months, is not only that the data and the activity data broadly in the US, except for the labor market, is quite okay. It's actually quite fine. It's not only that, but it's actually in large parts even accelerating and re-accelerating. So we're starting to see things, particularly on the consumption side, credit card data, weekly retail sales. All of those things have actually been picking up since the end of June. So clearly we are seeing not only data being fine and not pointing towards recession, but we're even seeing a re-acceleration. And I would also point out that a lot of bottom-up data, think earnings revisions particularly of cyclicals, think what companies tell us themselves. So when we look at the net number of companies either upgrading or downgrading their own forward guidance, that has shot higher, particularly since the beginning of the second quarter reporting season. And all of that actually only happens typically only at an early stage of the cycle, once we typically come out of a recession. Now, of course, that is not at all the case at the moment, but we are seeing particularly some of the bottom-up data looking like it's early cycle, some of the top-down data not only being fine, but looking like re-acceleration. And that, of course, is actually something where we say, you know what, it's not just about AI. AI is not just the one game in town.
Yes.
It's also other things. We are seeing that growth data more broadly are also picking up.
So you are looking for outperformance in cyclicals, so maybe banks, travel and leisure and so on, in the US and Europe, or specifically Europe, specifically US?
So I think it's a bit more nuanced. I would say it's particularly in the US where we do like the financials, the banks, where we do like the industrials, right? So a bit of a broadening out into the cyclicals. I'd be a bit more skeptical about small caps. So, you know, small caps with that really, really high degree of floating rate debt, that I think is a little bit more complicated because, of course, as soon as yields get sort of a hunch of, okay, growth is actually doing a little bit better, perhaps our terminal rate expectations and even our very front-end rate expectations are a touch too dovish, that of course would immediately then be, at least from a relative perspective, a headwind for small caps. Whereas I think it's within cyclicals really in the US. But I think, you know, there are other pockets as well. I think when we look, for example, at the financials in the Eurozone with continued curve steepening and bonds, that is still good for the banks. You know, when you look at Japan, also at the banks, that also still good, as perhaps also the Bank of Japan really has to hike in October.
Yeah, definitely on the path to normalization. Max, any of the recent headlines, like the H1B headlines, for example, or the potential for a Trump-Xi meeting, do any of those change your base case depending on their outcome?
No, so we basically stopped caring about the politics really since the announcement of the US-China pause in May. I think investors overall, when we look at the broad risk-on, risk-off picture, if we look at the, you know, is our risk assets going to outperform? Is it more a high-yield equity, EM rates picture over sovereigns? You know, is it a broader risk-on environment? That question is really no longer determined and should no longer be determined by the daily ins and outs of politics, in my view. Because what we really should be doing instead is looking at the data, look at expectations, look at consensus expectations for Q3. That is being upgraded for the US, but it's barely above 1% for GDP. For Q4, it's still only 1% GDP growth. When you look at Q3 earnings expectations, strip out tech from that, and actually consensus is saying there's going to be a sequential decline in earnings. That's what we're ultimately buying. We're buying the numbers, right? We really should be going back to what are the numbers telling us, what's the trend in the numbers, what are the expectations? Have the expectations gone up so much that it constrains the activity surprise potential? And that is absolutely not the case. That really is much more important than the politics.
Max, you're still underweight US Treasuries, gilts and JGBs. How is that expressing itself in your typical portfolio or your typical arrangement?
Yeah, look, I think for treasuries and for gilts, it really is continued weakness on the very long end, particularly in gilts. I think for JGBs, it is probably a bit more nuanced. For JGBs, it's probably more on the front end. It's really something where we say, you know what, growth actually is kind of fine. Underlying inflation is a bit worrisome in Japan. So perhaps really they have to get going with rate hikes in October already. That is nowhere near fully priced. And that of course, is more front end / belly kind of underweight position in Japan, whereas of course in gilts, in treasuries, it is the continued worry about fiscal, about debt sustainability. And in the US, it's the worries about Fed independence that are not going to go away that soon. There's also the worries perhaps that in the next 1, 2, 3 months, goods inflation does spill over, higher goods inflation does spill over into other categories. Nothing too worrisome that it really will spill over into risk asset valuations yet, because the level of yields is so much lower compared to where it was 2-3 months ago. But, you know, particularly the very long end, if we do get any sort of signs, any sort of warning signs around maybe there is more stagflationary tendencies coming in, that isn't really priced in, particularly in the ultra long end of treasuries after the recent rally.
So there could be more to go. Max, thank you so much. Always a pleasure. Max Kettner there of HSBC. Now on to other top stories trending on the terminal this morning. Super typhoon Ragasa moves away from Hong Kong. It's set to cross China's southern coast later today and is expected to bring heavy rains to nearly a dozen provinces. Ragasa is the most powerful cyclone worldwide this year. To raise as much as $20 billion. The deal could value the company at around $500 billion, propelling it into the highest ranks of the world's most valuable private companies. In league with OpenAI and SpaceX, sources say talks are in early stages. Apollo Global Management is rolling out 3 new private capital funds for wealthy individual investors in Europe. According to Apollo, the new funds will allow clients to invest for as little as €10,000. The launch of the funds is part of a broader trend of private capital managers looking to tap into Europe's wealthy individual investors. Coming up, President Trump strikes a new tone on Ukraine and Russia. That's next. This is Bloomberg.
The only question now is how many more lives will be needlessly lost on both sides. China and India are the primary funders of the ongoing war by continuing to purchase Russian oil. But inexcusably, even NATO countries have not cut off much Russian energy and Russian energy products.
President Trump ramping up pressure on Russia, saying NATO nations should shoot down Russian jets that violate their airspace. That's after the president took to Truth Social to say Ukraine is in a position to win back territory from Moscow. He elaborated on those remarks.
Most of you have seen the recent statement I put out a little while ago, and I'm glad you got it. But I feel that way. I really do feel that way. Let them get their land back.
Yep.
So we'll see how it all works out.
For more, Bloomberg's chief European correspondent Oliver Crook joins us now. Ollie, how significant a change is President Trump's new tone on Ukraine?
I think the big question will be, it depends how durable his shift in tone will be. I think that is what many of the European leaders here will be wondering. That is what the Ukrainians will be wondering. But let's just think, Vonnie. I mean, almost 7 months to the day, you had the two presidents sitting in exactly the same configuration back in the Oval Office, that disastrous meeting between Zelensky and Trump, after which really the fate of Ukraine and its war effort was really thrown into question. And after that, all the tweets and all the sort of truth socials about Zelensky being a dictator. And of course, Zelensky has put a great deal of effort into trying to fix this relationship. And of course, Donald Trump has also put a great deal of effort of trying to bring Vladimir Putin to the negotiating table. But now, 7 months later, Donald Trump is not talking about land swaps between Ukraine and Russia. He is talking about the Ukrainians fully regaining all of their territory. And later in that truth post, he said, actually, maybe they could go even further. Maybe they could take, basically, I guess, implying Russian territory. Now, when he says something like that, I doubt it's really meant to be sort of literal. You know, I think that a lot of this will probably be chalked up to kind of the art of the deal, showing great support for Ukraine, trying to bring Putin to the table because he tried the sort of sweet method, going a little bit harder. But I think from the Ukrainian perspective, this is exactly the wish list that they wanted, to say nothing of the fact that because of Donald Trump, now the EU is banning Russian LNG a year earlier than they would have. So this is really a good week as far as Ukraine policy is concerned, as far as Zelensky is concerned. Now we'll have to see sort of how much more action the Trump administration is willing to take to try to bring Russia to the table. But at least, and I have to say, just speaking to Ukrainians after that meeting back in February, the degree of their morale being crushed by that, now to have basically the feeling that Trump and the United States is back on their side has got to be hugely beneficial to their sort of state of mind and their ability to fight this war.
Yeah, and he also amped up pressure on Russia after being asked about aircraft and drones and so on entering NATO countries' airspace in recent weeks. There's that as well, and also more today at the UN. What are we anticipating today?
Yeah, well, I mean, it was really interesting to go back to those comments from Trump yesterday. He was asked by a reporter, basically, should these European nations be shooting down Russian jets that go into their airspace? And he answered very quickly and very simply, yes, I think they should. You know, that's something that basically very few European nations themselves have said. There have been a lot more cautious tones. We did hear from Donald Tusk, the Prime Minister of Poland, saying that basically if we get more air infractions, we will shoot these planes out of the sky. The Estonians, however, who triggered this last meeting of NATO after last Friday, when those Russian jets, three of them, three MiG-31s, combat ready and armed, went through their airspace for 100 kilometers. They're taking a much more measured approach. Have a listen to what the Estonian Prime Minister said to me yesterday about what happens the next time there's an infraction in their airspace.
NATO has protocols for that, and NATO has exact knowledge when something will happen. So we will follow the NATO's plans. And yes, we have the capabilities here because, to be honest, Russia's fighter jets were followed by Finns, and after that, Italians coming from Estonia's side to push them out from our territory and air. But we have protocols and measures in place.
So the Estonian Prime Minister there saying that, we have the capabilities, we have the abilities, but we're not automatically going to shoot these down because, of course, provoking that. This is a country of fewer than 2 million people is a very, very big decision. We've also heard from the German defense minister who says that, all these talks about shows of force and kind of slapdash discussions about shooting stuff out of the sky is not actually that helpful, and that will play into the Russians' hand. So really a divided opinion on how to sort of stand on that in NATO, just that the response should be robust. What robust means is not fully defined.
All right, Ollie, thank you so much. That is Oliver Crook there for us. Coming up, Jimmy Kimmel returns to TV. That's in your front page news next. This is Bloomberg Brief. I'm Bonnie Quinn in New York. One stock we're keeping an eye on this morning, Alibaba. Shares boosting AI sentiment across markets after they surged to their highest in nearly 4 years. They've been on a tear anyway. But they announced a collaboration now with Nvidia and a hike in their AI budget. Let's bring in Peter Elstrom for more. Peter, I'm confused. I thought that there were bans on Nvidia in China, both directions, that China had told companies not to use Nvidia and Nvidia wasn't allowed to send all but, obsolete, in Trump's words, chips to China. So how is this partnership going ahead?
Yeah, just taking a step back, what's going on today is that Alibaba is having its developers conference where it's laying out these very ambitious plans to invest in AI. The CEO, Eddie Wu, is talking about how they want to put even more money than they have so far into the market. It's quite unusual because you have companies like DeepSeek, AI startups within China that kind of began very aggressively in this market. And Alibaba, which is really better known as an e-commerce company, has come on very strong. They're talking about spending $53 billion over the next 3 years. Now they want to expand and go even beyond that level, according to Eddie Wu and his comments. What you're referring to is this collaboration with Nvidia. You're exactly right. Nvidia had been banned from selling its most advanced chips from China. They haven't been able to sell their most advanced chips for a while. There was also this dispute over the H20 chip in particular. Now Beijing doesn't want customers to use those chips. This is a different thing. What's going on is that Alibaba has decided to use its software platform for things like robotics and driverless cars. So they are teaming up in that area, but this is separate from the actual chips business itself. Alibaba is developing its own chips, and domestic players like Huawei are trying to develop chips too. So Alibaba needs those AI chips to be able to develop their services going forward. But so far, they're not using the Nvidia chips on that front.
Okay. Peter, really curious as to your thoughts on Micron. Estimates and a forecast after the close yesterday. Does the sentiment, continue, or are we at peak Micron now, like we've seen with other companies?
Yeah, it was a strong result. Micron is making progress in HBM chips. These are the memory chips that are paired with AI accelerators like NVIDIA's in particular. SK Hynix, the Korean company, is really the leader in that area. But Micron's been coming on strong. They gave a quite forceful forecast. They said that revenue for the next quarter is likely to be about $12.5 billion instead of the $11.9 billion that analysts had anticipated in the past. So they're making progress in that area. They still have some ways to go to catch up to SK Hynix, but they are making progress.
Does it have pricing power?
Well, I think right now in the HBM slice of the market, both SK Hynix and Micron have quite a bit of pricing power. They've been able to charge quite high prices. They're, again, pairing up with NVIDIA to be able to sell these to companies like OpenAI and Microsoft, which are building up these big data centers. So they're making some progress on that front.
Peter, thank you so much as always for joining. That is Peter Elstrom there. Time now for your front page news across all major newspapers. Jimmy Kimmel's return to late night TV. It was the first time Kimmel has spoken publicly since ABC pulled the show off the air September 17th. He addressed his controversial remarks last week over the shooting of conservative activist Charlie Kirk.
And the truth is, I don't think what I have to say is going to make much of a difference. If you like me, you like me. If you don't, you don't. I have no illusions about changing anyone's mind. But I do want to make something clear because it's important to me as a human, and that is you understand that it was never my intention to make light of the murder of a young man.
Well, coming up, a call for a portfolio strategy shift. We'll catch up with Sitara Sundar of JPMorgan next. You know, are pointed higher after a day of a breather yesterday, particularly for the Mag 7. They were down 1.5% as a group, but we do have futures pointed higher. The 2-10 spread at 54 basis points now, with yields a little lower across the curve. The 2-year yield at 3.56, 10-year yield at 4.10, and as you can see, the dollar index is climbing just a little bit today, up 0.3%. This is Bloomberg. It's 5:30 a.m. in New York City. Good morning, I'm Vonnie Quinn with your Bloomberg Brief. Here's what you need to know. AI adrenaline. Alibaba gets a boost after announcing a collaboration with Nvidia and ramping up its AI budget. Demand still strong. Micron gives an upbeat forecast thanks to strong appetite in AI equipment. And a tone shift. President Trump shows optimism about Ukraine's war prospects while saying NATO countries should shoot down Russian jets that violate NATO's countries' airspace. Let's take a look at those markets because we're right back to 2 days ago with futures pointing higher. This after a breather yesterday. Now, overall, the indices weren't down by that much yesterday, but we did see the Mag 7 down 1.5%. Now, the S&P 500 was just down some tenths of a percent. Same for the Nasdaq 100 and the Russell 2000, which at one point yesterday was up 1%. But the S&P did end the session down about 0.3%. We do, though, have Micron results impacting the sentiment today as well. Micron beat estimates. Also, its forecast was much more optimistic than expectations were looking for. And don't forget, you know, we've been within 2.5% of a record high on the S&P since June. Every single day, we're just off the record high once again. So definitely sentiment is elevated. The 2-year yield down a little bit today. In fact, across the curve, we're seeing lower yields pretty much, with the 10-year at 4.10 and the 30-year at 4.72. That 2-10 spread is a little wider today, about 55 basis points. And we're keeping an eye on oil too, just a little higher. Brent crude now up 28 cents at 67.90 a barrel on this tone shift, which is a little bit harder on Russia from the President of the United States. So let's get to some stocks to watch now. Over to London and Valerie Teitel. Valerie.
Good morning, Vonnie. Let's start with Alibaba. As you mentioned, they raised their AI infrastructure spending target to over $50 billion. The CEO is saying they do not want to fall behind in this AI infrastructure build-out race. Alibaba liking that news, up over 9% in pre-market. There's also some other positive news. They did agree that they are teaming up with Nvidia when it comes to using their software and their physical AI, their robots. Also some news that the famed tech investor Cathie Woods took a stake in the company for the first time in 4 years on Monday. Let's move over to earnings. Micron out with a beat on revenue and a quite decent guidance for the path forward. Micron up 1.6%. The bar was very high for this stock in the earnings release, given it has rallied 45% in the month of September alone. Lastly, let's move over to the lithium miner. Lithium America is absolutely flying in pre-market, up 67%. The Trump administration is said to be seeking to convert a $2 billion Department of Energy loan into a 10% equity stake in the company, a very similar structure to what they did with Intel. Vonnie?
Certainly boosting that stock. Valerie, thank you so much. Valerie Teitel there. Sitara Sundar of JPMorgan suggesting a move away from the 60-40 portfolio approach, writing, with inflation volatility rising, the risk of a persistent positive stock-bond correlation grows. This is calling for a shift in portfolio strategy. I'm pleased to say she joins us now. She's head of alternative investment strategy at JPMorgan. So let's just dive into that a little further. What would you want to add or take away from your portfolio if 60-40 isn't going to cut it these days?
Yeah, it's the number one question that we've been grappling with so far this year is this idea that we're in a shifting macroeconomic environment that what we've experienced post-GFC to pre-2022. So what does that mean? Higher inflation volatility, rates are coming down, but rates are likely going to be elevated in this cycle than what we saw during that period of time. All of that at a time of pretty moderate, at potential type of economic growth. We'll see what the impact of AI is on productivity and ultimately economic growth, but that's the environment that we're in right now. Higher inflation, higher rates, moderate economic growth. So what does that mean? From our perspective, it means that the 40 part of your portfolio, that core fixed income part of your portfolio, still works very well for defending against any kind of economic downturn. But there is a risk now that is quite present on inflation volatility and inflation moving to the upside. So what does that mean from a portfolio perspective? Quite simply, it's adding real assets to the portfolio. Infrastructure, to a certain extent, real estate as well, which has multiple secular drivers that we can talk about as well. But it's ensuring that you have that real asset exposure that has those embedded inflation escalators that are embedded within these contracts and embedded within these returns that can help diversify against that risk.
All right, well, let's just listen to what Fed Chair Jay Powell did have to say about inflation yesterday. In fact, it is something he said last week at the FOMC as well.
So it's not the big factor. It's not, a big inflationary thing, but it is something that is driving up inflation a bit. And the question is, are companies then, are they going to eventually be able to pass that stuff through? And then that might drive inflation up a little higher. So we've been watching this since the beginning. Half our mandate is inflation. And I would say that the pass through to consumers has been later and less than we expected. Almost all the forecasts are for there to be a one-time pass-through, which will go through the end of this year, well into next year.
Later and less, and a one-time pass-through. So, it sounds like we're maybe a little bit protected from inflation and that the Fed does have their eagle eye on it. So, is there really a need for all of these real assets that you're talking about?
So it's a great question. I would say two things. One, even if the base case scenario, even our base case scenario is that inflation is likely going to end up coming down. And we're also seeing, even in our own analysis, the same thing, that a third of the tariffs are being borne by the consumers and the rest are being borne by the businesses because their margins are accretive enough that they're able to eat some of that tariff cost. But the thing that I'll say is this. There's two different things when we talk about real assets, and especially within infrastructure, so I'll focus on that. One is the idea that it can add inflation-protected income to your portfolio. But two, let's think about what has been in vogue so far this year, and it's this idea of artificial intelligence and an artificial intelligence CapEx boom that we've seen quite meaningfully. When we think about where we are in the AI cycle, the digital infrastructure side, the chips and the semiconductors is a really big part of that. But the other massive part of that is power. And who is at the forefront of power? It's these infrastructure players within this space, especially now that power is 60% of the global infrastructure ecosystem.
So as an individual investor, how do you get access to this? Because a lot of these companies are private. And also, do you take that allocation away from your bond portfolio section or your equities portfolio?
It's a great question. Primarily when we're thinking about real assets and infrastructure specifically, that is played through funds within the private space. You can get some exposure to that in the public space through utilities, which is a sector that we're really constructive on at this point in time, given the AI-related CapEx growth and the power that is needed to fuel the AI growth that we expect to see over the next decade. But two, where to fund it from, it's the number one question. And we would actually fund it from the fixed income part of the allocation, but particularly the longer duration fixed income part of the allocation. Because what we're also seeing so far this year is the idea that the longer end of the curve post 10 years and out, there's been a significant amount of volatility. We would prefer the core fixed income part of your portfolio be more in that belly of the curve, and you take that longer duration positioning and you put that into infrastructure.
How much does all of this thesis depend on a beneficial or a benign policy environment? And if there is a shift in administration at some point in the next few years, does that change, your outlook?
I actually think that this is one of the few places in the environment and in the market that is agnostic to policy shifts. And what do I mean by that? When we think about the next cycle, the regions and the countries that are likely going to end up dominating, the companies that are going to end up dominating, are those that are embedding AI into their business processes. It is the generational technological shift of our lifetimes. So because of that, regardless of the administration and policies, we believe that this CapEx that's going to come, and then therefore the investment and the bottlenecks and the returns that are likely going to be generated within this space are cycle agnostic and policy agnostic.
We're about to head into another earnings season. Well, we have a couple of weeks to get ready. Will corporates show that, their margins are getting squeezed even further next quarter, or will we see a little more impact on the consumer? What's your outlook for that quarter?
It's going to end. The dispersion that we've already seen so far this year is likely going to continue to pick up. Because what are we expecting for the second half of this year and really into next year? We're likely going to see, as you mentioned, the pain of tariffs start to come through in fruition. What we're going to see, what we think we're going to see, is a continued dispersion between companies that are profitable versus not, and large cap companies that have more diversified supply chains versus small cap companies that don't have as much of a diversified supply chain and are likely going to bear the brunt of the cost on this front.
As if small caps haven't had a hard enough time as it is.
But I will say, when we think about the small cap universe, it's not for naught, because where we're seeing the opportunity actually within the small cap businesses, I would say within the equity market, is actually less on the public side and more on the private side. There's still growth to be had. It's just that when we're thinking about the next 10 years, that type of growth and that type of innovation usually requires strategic capital and majority ownership and operational changes. And we would prefer to take that incremental risk in private markets than in public.
Sitara, fascinating. Thank you so much for joining us in studio today. That is Sitara Sundar of JPMorgan. Now to other top stories trending on the terminal this morning. Super typhoon Ragasa moves away from Hong Kong. It's set to cross China's southern coast later today and is expected to bring heavy rains to nearly a dozen provinces. Ragasa is the most powerful cyclone worldwide this year. Crypto giant Tether is in talks with investors to raise as much as $20 billion. The deal could value the company at around $500 billion, propelling it into the highest ranks of the world's most valuable private companies, in league with OpenAI and SpaceX. Sources say talks are in early stages. And the latest on the talent race, UBS raising payouts for its US wealth advisors. The changes follow reports of departures by UBS-affiliated wealth advisors in the US. The bank declined to comment. Coming up, President Trump ramps up pressure on Russia as world leaders gather at the United Nations. That's next. This is Bloomberg.
Emmanuel has actually helped me with a couple of the wars. We settled 7 wars. The biggest disappointment, but I think that'll happen eventually, is the Ukraine and Russia situation. But we've settled. I thought that was going to be the easiest one because of my relationship with Putin, but unfortunately that relationship didn't mean anything.
President Trump striking a different tone on Russian President Vladimir Putin after his speech at the United Nations. Trump also suggesting to reporters on the sidelines of the General Assembly that any NATO member could shoot down Russian aircraft violating its airspace. For more, I'm joined by David Gura, host of the Bloomberg Big Take podcast. So, David, this is obviously a shift in tone. Was it premeditated? How significant could it be?
We'll be forgiven for maybe having a hard time figuring out what the president's position is on Russia. It has evolved so much in a matter of months and certainly over the last few years. But that reaction to these recent Russian incursions, certainly the drones that were flying over Poland and the fighter jet over Estonia, was striking, I think, because European leaders in particular have been trying to get a sense of where the president stands on all of this. And we've seen the president now meet with President Zelensky several times now and seemingly warm to him, become more compelled by the story that Ukraine has been telling about their position in this war and what they need. I think it does raise questions about what U.S. support is going to be going forward. Yes, certainly should NATO shoot down any jets that are making incursions into European airspace. Notably, we heard Marco Rubio, the Secretary of State, yesterday kind of play that down, didn't think that would be the case. But what do security guarantees look like going forward here? What is the U.S. prepared to do? Those are still largely unanswered questions. And yes, so it was provocative. We heard the president say that. Yes, I do. But that was a very minimal answer, a very concise answer. There's a lot that still I think we need to figure out.
Absolutely, and it's not like it's a green light for, from NATO for countries to do that, right? It's just the US president giving his opinion. He gave a lot of opinions, in fact, during his address. What were your takeaways from the address itself? I
thought about it a lot in contrast with what happened in 2017 when he first spoke to the UN. He was a new leader on the world stage, was decidedly America first in his ethos, but I think didn't have a sense of sort of where the world would take him between then and now. And so much of what he telegraphed and desired to do has come to pass. So he struck me as much more comfortable in that setting, despite the fact that the teleprompter didn't work and he had this mishap on the escalator. He seemed comfortable talking to those leaders, laying out a lot of what he sees as accomplishments here in the first few months of his second term. And I think the crucible in which this is happening is so important. He's been very critical of the UN over the course of both of his terms. But now the UN is a very tricky position. It has relied on the U.S. for about 20% of its budget every year. The U.S. owes about $3 billion in this year alone. So I think the UN is grappling with what its role looks like going forward here if the U.S. is both less engaged with its activities day in and day out, as we've seen, the U.S. pulling out of the World Health Organization, for instance, but also failing to meet those financial commitments that have been so integral to the UN going forward. I think the president recognized that. He didn't say outright that the U.S. was withdrawing from the UN, but I think certainly recognizes the UN depends on the U.S. a great deal, and he has a lot of power to sort of sway what it looks like going forward.
It was interesting. There was a lot of laughter in the crowd at some of his jokes, But I want to move to the domestic situation because we did have a special election in Arizona, the 7th District. The Democrats won. How significant is this, and how does it change the math in Congress?
This is Adelita Grijalva, whose father passed away a few months ago. He was the representative of that district for many years. She's a progressive. She worked in local government there. And so what we're seeing here is that majority of the Republicans have had in the House narrow even more, and there's a way to kind of tie this to the United Nations. The president's picked to be the U.S. ambassador to the UN, Elise Stefanik. He withdrew that nomination because he was worried about Republicans not having a big enough majority in the House. By her winning this seat yesterday, it kind of makes it more clear that Republicans are going to have a harder time trying to keep their caucus together to prevent some legislation from coming forward here. Then you have a progressive candidate. What does that portend about sort of how Democrats will fare going forward here? There are two more special elections coming up here. One in Houston. Sylvester Turner, who was the mayor of Houston, congressman there, passed away a few months ago. There'll be a special election there, and then one in Tennessee as well. So we're kind of getting the contours of sort of what the Democratic Party's position or candidates are going to look like going forward here, but also, again, that majority in a kind of tenuous position as we approach the end of the year.
All right, David, I'm sure we'll be listening to a lot more about this on your podcast. And I would urge everybody to listen in. That is David Gura. Catch David on the UN, President Trump, and more on the Bloomberg Big Take Daily. That's available anywhere you get your podcasts. Turning to tech, shares of Alibaba extending gains pre-market after surging to its highest in nearly 4 years. That's as the company announces a collaboration with Nvidia on so-called physical AI. Bloomberg's Tom McKenzie joins now. Physical AI, Tom, are we literally talking robots here?
We are essentially using and talking about robotics, and that's certainly what Alibaba is focusing in on when it comes to this partnership with Nvidia that they have now confirmed. This is focused on the cloud part of Alibaba's business, which has been a significant revenue driver, but it was really a forward-looking, future-looking prospect as they look to integrate some of Nvidia's software into that cloud proposition and try to connect up some of these hardware devices, notably robotics. But you also had, of course, the CEO of Alibaba talking about their investments on AI infrastructure and data centers. And of course, it aligns with all that spending that we've been hearing about in recent days. And just for many, certainly the bulls will confirm that that demand picture remains. And certainly the capex and the spend on infrastructure and data centers is very far from over. The CEO of Alibaba saying they are going to be spending more than their original $50 billion in terms of plans around data centers and infrastructure on AI. They're going to outstrip that number, and it actually projects, the CEO of Alibaba, potentially $4 trillion of money being spent on data centers and infrastructure globally over the next 5 years, and Alibaba clearly positioning itself to be a big part of that story.
I have to check, but I think that's actually bigger than the entire market cap of Nvidia the last I looked, which is fascinating. But it is interesting, right? Because there was this awkwardness between Nvidia specifically and, the US company and China. So is this changing the relationship between the two?
Well, it's a reminder, isn't it, that Nvidia is not just the maker of GPUs, it's not just the maker of the AI accelerators, but of course it has that very sophisticated and deep software stack as well. And it's the software part of the business, or the unit at least, and the product that they are now partnering with Alibaba on. We'll see if there's any response, of course, from the US or China on that front. It is intriguing, to your point, because we've had, of course, Chinese authorities trying to pressure companies like Alibaba and Tencent from not using Nvidia's chips. But this is not the chips, this is the software, so maybe they are comfortable with that for now. And it's a reminder as well that Alibaba is very much at the forefront, at the cutting edge, when it comes to China's AI innovation, with a rapid turnaround and update of their own models.
Yesterday, Tom, the narrative was the circularity, this sort of, I'll give you money if you then give me some of that money back. But then we had a Micron forecast and earnings beat, obviously, but the forecast showing AI demand still extraordinarily strong, and it looks to be powering the market once again today.
Yeah, it's another catalyst, isn't it, for the broader market and the picture in terms of that AI theme and the fact that there is no signs that this is ending the arms race in terms of the build-out of data centers. Clearly, it is benefiting Micron. The high bandwidth memory, or HBM memory, that sits alongside those Nvidia and AMD GPUs. You cannot have those AI accelerators without high bandwidth memory. And clearly, Micron is well positioned and expects to be well positioned into the future. It was that look ahead. As you say, the next quarter, for them, it's the fiscal first quarter 2026, and they are projecting revenue of $12.5 billion US, well above the estimates. They're also expecting profits in terms of per share, $3.75, again above the estimates. And in the most recent quarter they reported, sales actually jumped almost 50%. So again, it is a company that appears to be neck and neck, arguably, with SK Hynix over in South Korea, ahead, arguably, of Samsung, that's been paying a bit of catch-up on high bandwidth memory. Micron saying that they are going to have to spend maybe more than $14 billion. They spent about $14 billion in the last fiscal year. They may have to spend more to catch up because there is that squeeze in terms of capacity. Meeting that demand could be a challenge.
Tom, thank you so much. That is Bloomberg Tech Europe anchor Tom McKenzie. Coming up, more Fed Speak on deck. We'll get you set up for your trading day next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Now, a look at what's ahead today. First up, new home sales data. That comes at 10 a.m. Eastern. Then the Treasury will auction $70 billion worth of 5-year notes. That's at 1 p.m. Plus, more Fed Speak. San Francisco Fed President Mary Daly set to deliver remarks at 4 p.m. And starting at 9:15 a.m. Eastern, tune into panels from the Bloomberg Philanthropies Global Forum right here in New York City. Let's have a quick at some movers now in the early going. Alibaba, there was that double announcement, of course, a collaboration with Nvidia and its hike in its AI budget, up almost 10% now. Of course, Cathie Wood also buying Alibaba, among others. Micron Technologies up 1.5%, gave an upbeat forecast for the current quarter. AI equipment demand. And Lithium Americas up 65% after the Reuters report that the Trump administration is seeking an equity stake of as much as 10%. Surveillance is next.